Good morning. This is Cameron for M-tron Industries CEO. Thank you for listening to our 2026 M-tron Q1 earnings call. Please note that this call has been recorded, and the recording will be available on our investor relations website, ir.mtron.com. Yesterday afternoon, we released our earnings for the first fiscal quarter of 2026. Before getting underway, we're required to advise you that the following discussion should be taken in conjunction with our most recent financial statements and notes as contained within our 2025 10-K, which was filed on 26 March 2026 with the SEC. This discussion may contain forward-looking statements within the meanings of Section 27A of the Securities Act of 1933 and Section 21E of the Securities and Exchange Act of 1934. These forward-looking statements contain known and unknown risks and uncertainties which are detailed in our filings with the SEC. Although the company believes that their forward-looking statements are based upon reasonable assumptions regarding its business and future market conditions, there are no assurances that the company's actual results will not differ materially from any results expressed or implied by the company's forward-looking statements. The company undertakes no obligation to publicly update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise. Readers are cautioned that any forward-looking statements are not guarantees of future performance. With that, I'll begin the comments on our fiscal year 2026 first quarter performance. As a reminder, M-tron designs and manufactures highly engineered RF solutions, including electronic components and subsystems, used to control the frequency and timing of signals in electronic circuits. We're a global company with 3 manufacturing sites located in the United States and India. The company's primary markets include aerospace and defense, commercial avionics, industrials, and space. We're pleased to report a strong start to our 2026 fiscal year, with continued strength in M-tron sales and good financial performance for Q1 FY26. Our revenues continue to be driven by defense-related orders, and we also saw growth in the commercial avionics market. The first quarter of 2026 has to be one of the most active ones in recent history, with historic changes taking place in the U.S. defense procurement process, the rapid acceleration of certain types of weapon systems orders, efforts to significantly shorten the procurement cycle and reduce our dependency on China for many critical minerals, coupled with the initiation of operations and conflicts in Venezuela and Iran. Most significant to M-tron, we saw that Deputy Secretary of War Feinberg and Undersecretary Duffy negotiated 7-year framework agreements with both Raytheon and Lockheed Martin for the procurement and significant expansion in production volumes of certain precision-guided munitions. Lockheed will be tripling the production of PAC-3 interceptors for the Patriot air defense system, and Raytheon is doubling to quadrupling production of 5 different missile systems. We have been asked to bid on several of these opportunities and anticipate being competitive for many of these procurements. Wins would result in expansion of our backlog and considerable extension of revenue visibility into the future. These contracts, once awarded, are not expected to significantly change volumes until late 2027 and beyond. This timeline and anticipated order volume could change after stockpile assessments at the conclusion of the conflict with Iran. In addition to this long-term demand driver, the administration has submitted a proposed 2027 defense budget that increases procurement by 42% over that of fiscal year 2026. M-tron content is present in many of the areas of increased investment, and we are already seeing short-term pickups in counter-drone and border security-related procurements. Yesterday, we reported the following Q1 FY26 results. Total revenues for the quarter were $14.7 million, a 15.3% increase over the $12.7 million of revenue in the same period last year. This represents a 3.2% increase over Q4 2025. The revenue increased in the period primarily due to strong defense programs combined with higher avionics and product shipments. Gross margins for the first quarter were 44.9% compared to 42.5% in the first fiscal quarter of fiscal year 2025. This increase is primarily due to higher revenues, a healthy product mix, and manufacturing efficiencies. The gross margin was still impacted by federal tariffs, with no meaningful change in tariff impact on margins during the quarter. Net income for the period was $2.4 million, or 67 cents per diluted share in the first quarter of 2026, compared with $1.6 million or 56 cents per diluted share in the first quarter of 2025. The increase in revenues discussed above, manufacturing efficiencies, and higher interest income partially offset higher engineering, selling, and administrative expenses related to higher research and development costs, higher sales commissions from an increase in revenue, and an increase in corporate expenses consistent with the overall growth of the business. Adjusted EBITDA was $3.2 million for the first quarter of 2026, compared with $2.5 million in the first quarter of 2025. The increase was primarily due to the revenue increase discussed above and improved gross margins. Backlog was $76.8 million as of March 31st, 2026, compared to $76.4 million as of December 31st, 2025, and $55.5 million as of March 31st in 2025. The increase in backlog was primarily driven by orders in the aerospace and defense, avionics, and space sectors. While demand drivers are quite strong in our two main end markets, we are currently assessing what impact this will have on our forecasted 2026 results. Many of the activities I've highlighted continue to strengthen our revenue growth and product portfolio. We are evaluating whether we anticipate seeing it impact our forecast. As many of you know, there is a ramp-up period to order materials, train production teams, and potentially outfit production lines when order volumes are increased. One note that we wanted to remind investors that the company expects to have lower gross margin and operating margins in Q2 of this year due to a large stock compensation expense entry for Q2, which will impact our net income for the period. We suggest that you look at the adjusted EBITDA number and cash flow from operations for that period to understand the cash-generating capabilities of the business. And speaking of cash, the company ended the quarter with $51.96 million of cash and cash equivalents on the balance sheet as of March 31st, 2026. In addition, the rights offering, which we commenced on March 31st, 2026, expired at 5 p.m. on April 20th. The offering was fully subscribed with approximately 84% of the allocated shares allocated against the basic subscription rights, and the remaining shares granted to those exercising oversubscription rights. $42.1 million was received in gross proceeds from the offering and will be used to provide capital for acquisitions, support manufacturing and factory requirements, and general corporate purposes. Lastly, having a strong balance sheet positions us well to compete for these large contracts, strengthening our customers' confidence in our ability to deliver. We continue to pursue complementary acquisitions and strategic partnerships in the RF components and subsystem space, as well as other subsystem or solution areas focused on the aerospace and defense markets. We are currently enhancing our internal corporate development capabilities in order to execute on this strategy of making complementary, accretive acquisitions. Having a U.S.-based advanced manufacturing capability to support our joint forces is more important than ever before, and we're encouraged by the changes taking place at the Department of War to strengthen the defense industrial base. We thank our employees for their dedication to their jobs and our mission, and we also appreciate the continued partnership of our dedicated customers and the trust they place in M-tron and its employees. Before I close this session, I want to mention that we will be holding our Investor Day meeting next week on Tuesday, May 12th at 12 noon at the NYSE facility at 11 Wall Street. Please RSVP to ir@mtron.com sometime today if you'd like to attend, as the building requires being on the security list for admittance. In addition, we will hold our annual meeting this year in Orlando, Florida at 9 a.m. on the morning of Tuesday, June 16th. More information to follow on our investor relations website and in the proxy materials being mailed to all shareholders of record. With that announcement, I'd like to thank everybody for listening today and your interest in M-tron. Have a great day, and please contact us at ir@mtron.com should you have additional questions.